Good morning. This is X-Pulse AI Morning Mix. It's Friday, April 17th. Today, OpenAI's partnership shakeup, a new model aimed at high-value professional work, IPO headwinds, and two big legal signals. I've got Orion with me, ready to jump in?
Ready, let's do it.
Storyboard 18 reported on April 15th that an internal OpenAI memo says the Microsoft tie-up limited our ability, with Amazon showing major interest, figures cited up to $50 billion. What's going on?
The reporting says OpenAI's chief revenue officer, Denise Dresser, circulated a memo arguing the Microsoft partnership constrained flexibility, especially for enterprise go-to-market. At the same time, Amazon is reportedly signaling serious investment interest, with some reports floating up to $50 billion. Net, OpenAI may be repositioning its alliances.
So is this about cloud capacity or control of customers?
Both. Cloud is the obvious bottleneck, compute, pricing, deployment options. But enterprise is the prize. Who owns the distribution, support, and long-term contracts? If OpenAI can diversify beyond one strategic partner, it gains leverage, commercially and technically.
Corporate partnership drama like a group chat, but expensive.
Exactly. And if Amazon truly steps in at that scale, it could redraw the competitive map. Microsoft AI looks less exclusive, AWS gets a flagship model story, and buyers may see more choice in where and how they deploy OpenAI systems.
AP News reported on April 16th that OpenAI is introducing a new model aimed at high-value professional work with a sharper push into business users. What should we listen for?
OpenAI is signaling a product and packaging shift, less general assistant for everyone, more reliable coworker for revenue-generating tasks. Think drafting and analysis that's defensible, workflow-friendly, and easier to govern, especially as competition with Anthropic for enterprise budgets intensifies.
When they say high value, do you read that as pricier or more specialized?
Likely both. Higher willingness to pay in law, finance, consulting, and engineering, and more task-specific performance tooling and controls. The unspoken promise is fewer surprises, tighter behavior, better citations or traceability, and stronger admin features so companies can actually roll it out at scale.
Does that raise the bar for everyone else selling workplace assistants?
Yes. Once one vendor markets professional grade, it pressures others to prove reliability, security, and auditability, not just clever demos. Enterprise buyers are increasingly shopping for risk management as much as raw capability.
The Hindu, citing the Financial Times, reported on April 15th that some backers are scrutinizing OpenAI's reported $852 billion valuation as it pivots toward enterprise. What's behind the nerves?
At that valuation, investors want a clear story, durable revenue, defensible margins, and a path to scale without runaway compute costs. A pivot to enterprise can help, bigger contracts, stickier workflows, but it also demands enterprise-grade support, compliance, and predictable performance. That costs money up front.
Is the valuation question really about numbers or about strategy whiplash?
Strategy clarity is a big part of it. If partnerships are shifting, product lines are multiplying, and regulation is tightening, investors price in execution risk. The market can tolerate big valuations if the narrative is coherent and the unit economics look like they'll improve over time.
So the enterprise move could calm investors or raise the expectation bar.
Right. Enterprise customers are less forgiving than consumers. They want service-level agreements, controls, and accountability. If OpenAI delivers that consistently, it strengthens the valuation case. If not, scrutiny only gets louder.
CNBC's analysis on April 15th says public support is waning for AI and data center expansion, potentially complicating OpenAI and Anthropic IPO plans. What's the practical impact?
Public opinion becomes policy pressure. If communities resist data centers over power, water, land use, or noise, permits slow down and costs rise. For companies eyeing public markets, that adds uncertainty. Growth depends on infrastructure, and infrastructure depends on political and local acceptance.
Is this more about AI fear or about not in my backyard economics?
A mix. Some of it is abstract, jobs, misinformation, control, but a lot is concrete. Electricity bills, grid reliability, and where the facilities get built. Data centers are turning into the new neighborhood controversy. Everybody wants the benefits, nobody wants the transformer next door.
Does that change IPO timing?
It can. If sentiment worsens, regulators feel empowered and investors discount risk more heavily. Companies may wait for clearer policy, stronger profitability signals, or long-term power contracts that look less politically fragile.
The Daily Record, via Reuters coverage, reported on April 15th that a federal judge ruled AI chatbot communications are not protected by attorney-client privilege. What should people change today?
Treat chatbot logs like they could show up in discovery, because they can. Privilege generally attaches to confidential communications with your lawyer for legal advice. A third-party chatbot provider, plus retained transcripts, can break that chain. The safe default is don't paste sensitive facts or legal strategy into general AI tools.
So what's a safer workflow? Private models or only lawyer-run tools?
Lawyer-run tools with clear confidentiality controls are the cleanest. Private deployments help, but you still need policies. What can be entered, retention settings, and who can access prompts and outputs. Also, remember outputs can be wrong, so you can create bad exhibits as easily as good drafts.
Any simple rule of thumb for busy teams?
If you wouldn't email it to a large group, don't paste it into a chatbot. And if it's legal sensitive, route it through council-approved systems with documented safeguards.
Startup News reported on April 17th that Elon Musk's lawsuit against Sam Altman and OpenAI over governance is headed to trial this month in federal court in Oakland. What could a trial change?
Trials surface documents, timelines, and decision logic. Even before a verdict, testimony can reshape perceptions of governance and incentives, who had control, what commitments were made, and how the organization's mission evolved. That can affect partner confidence, recruiting, and how regulators view the company's structure.
Could it impact board composition or future decision-making?
Potentially, yes, depending on claims and remedies sought. But even absent structural changes, the reputational and operational drag is real. Leadership time, investor questions, and counterparties recalibrating risk while contracts and partnerships are being negotiated.
So it's not just courtroom theater.
Not at all. For a company at the center of the ecosystem, governance isn't a side topic. It's part of the product's trust story.
Let's sweep the rest of the board, starting with the big measurement picture. What jumped out from Stanford's 2026 AI Index?
Stanford reported on April 15th the United States-China model performance gap has largely closed, while safety benchmarking is still sparse. It also logged 362 AI-related incidents and noted governments shifting from pure regulation toward investing in domestic capacity, compute, data, talent, and models.
Staying with government, the House held a workforce hearing. Then on the money side, venture dollars are concentrating, right?
Yes. The House Education and Workforce Committee held a hearing on April 15th about AI's economic impact on workers, and Crunchbase reported April 16th that in Q1 2026, venture capital concentrated in a handful of large AI companies, North America dollars up about 190% year over year, while deal counts fell.
On adoption, healthcare, and finance are both using AI, but cautiously. What's the pattern?
PMNets reported April 15th that healthcare adoption is booming in administrative workflows, while chatbot reliability remains uneven for clinical use. Overtrust risk is real. And the Manila Times reported April 17th that about half of financial services leaders say AI is deployed, but governance, privacy, security, and data quality are still major blockers.
And two quick infrastructure notes, one in Europe, one in energy and hardware.
CNBC reported April 16th that Anthropic is expanding in the United Kingdom with a new London office. TechRadar reported April 15th that Microsoft's roughly $7 billion AI infrastructure push is tied to increased methane gas deals, raising climate concerns. Also, Morningstar, via AccessWire, reported April 16th Aehr Test Systems landed a $41 million production order tied to hyperscale AI demand.
That's Xpulse AI Morning Mix from Xpulse for Friday, April 17th. Share it with someone who'd find it useful. See you next time.